What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we have a liquidation event going on. Holy mackerel, look at the size of this red candle on the 4-hour chart. So in the past several days since my last update, I haven't said much because we have been in a boring period of consolidation happening all the way up until today. And now we have broken this bottom level of support of the consolidation move. Now, back here when we had the big dip, we talked about whether or not Bitcoin was going to dip back to the red dash line at this point, but it did not. It made it back above this critical level of support, and we entered into this side banding zone. But pay special attention because now we have broken the bottom of this zone. And why this is important is because we see this big fat volume node right here. That's a big node to fall off of, the 59K node. So when you fall off of a node that fast, that is that big, which has another great big node right up above it at 60,000, you got to look at what's going on. So apparently what we are seeing happening right now is that a bunch of people who put a lot of leveraged longs onto their order books, well, they got taken to the cleaners. And we see that we could have a pending stochastic crossover right here on the 4-hour chart. Now, this is interesting because just a day ago, the Feds announced a rate cut that is coming to save the economy, to save the collapse from the stock market. And it seemed to have worked for the stock market. Let's just jump over and look at the Dow really quick, and we'll come back to this big fat red candle. So after that rate cut announcement, we moved up. But notice this, we are flattened out, buried right up here at the top of the stochastic on the Dow Jones chart. And it looks like we've already got our money's worth for that rate cut announcement. So I'm thinking this is going to fall off and the Dow could slip back down to 39K. But back to Bitcoin, we didn't get any tremendous bounce up at the announcement of that rate cut. We got the reverse, a big fat dump, okay? But the reason is it's not because of weakness in the market or anything that is threatening the security of the Bitcoin blockchain. It's only because a bunch of institutional investors and the exchanges saw the opportunity to rob people blind.
Woo!
And take their money and liquidate those longs. I mean, this is just what happens. When you get too many people lined up with leveraged trades where they're all betting that we're going to go up from here, well, those big companies out there, the leveraged folks take a chance with, the exchanges, they see your orders. And so if 90% of people are betting that we're going to have a break to the upside, they're going to take your money. That's all it is. It's just nothing more than that. Now, conversely, once we get down to the bottom, let's say we hit the red dash line, and then everyone is thinking that we're going to fall off of this red dash line and dip down lower, and you get 90% of people who place leveraged trades to short Bitcoin. Well, they're going to get taken advantage of just like the ones did today. And they're going to drive that price up, and they're going to take everybody's money who was betting that we were going to drop down below. And that's just what they do. That's why I'm a contrarian. I never believe what I'm seeing completely on the charts, even though the charts usually don't lie. But I've been quiet during this little period of consolidation because I just was not convinced that we were going to have one big surge up in the midst of all of the economic uncertainty, okay? Some people don't believe that the cryptocurrency sector is affected by world news. I think it is. I think that people do get scared out of the market, and then the big institutional investors, they realize that when the retail investors are going to get scared out of the market, they're going to take advantage of it. They're not scared at all. They're just looking to continue to siphon off the money from those of us that are on the retail side. which just fattens their pockets over time. Okay, so what else do we see on this chart? We see something that is quite interesting, a big glaring technical indicator, not so much of an indicator, but just a situation. Here's what it is. You got the 200 EMA line right there, lining up with this volume node. You got the 50 EMA line right there, lining up with that volume node. And the current price is below both the 50 EMA and the 200 EMA with an impending crossover on the stochastic. So that is very bearish. That would tell me that we've probably got more room to grow now, or more room to fall rather. Now, where in the world is my MACD? Why has it disappeared from my chart? I don't know. Let's see if I can get that back up here. Okay, there it is. I got it back on the chart. I don't know what in the world's going on there. So, on to the MACD. This is also looking bearish. That's a confirmation of what we could see happening, because what we're looking at is the fact that we had been printing these light red bars on the histogram, and now we got a big fat red bar, a solid red bar. Plus the fast line, the blue line, which was looking like it was going to come up and do a bullish cross, it fell off. So it turned away from the slow line. And that's because of the liquidation event that is going on. So sometimes the charts can say one thing like bullish crossover, and then when you have a major move by whales or institutional investors or the exchanges that take advantage of you people doing the leverage trades, we can violate what the chart is telling us. So going backwards to the 1 hour, it's very bearish. We're just about to cross, we've crossed the center line, and we have a bearish cross here on the MACD oscillator. So we're probably still going to be looking to go downward. Now, looking back up here again at the 4-hour chart, we can see an immediate target, this volume node at about 54 to 55K. That's stopping point number 1. Now, if we can collect ourselves, we could move up from there, or we could go all the way down to the red dash line. Now, let's look at the 1-day chart, and this is looking bearish. This is very interesting. Now, pay close attention to these candles here. Notice the previous red candle on the 1-day chart and how the current candle is completely detached from that previous one. The body of the current red candle is at the bottom of the previous, only wicking up above. That doesn't happen a lot. Look at the history here. You usually have a crossover, okay, of the bodies of the candle. When those candles don't cross over with the bodies, things get very bearish. So let's just zoom in here and I'll show you the example of that. Look at this candle and the body, and look at this one. This one, the top of the candle is outside of the bottom of the previous, and we only wicked up for crossover. That was very bearish. So we formed another one that dropped out. Notice this one also. The top of this candle is below the body of the previous. Very bearish. Same thing happened on the next one. The top of the candle is below the bottom of the previous. The next one was green, and we see that the bodies cross over. Even with this red one, the bodies cross over. It didn't fall outside and form the body outside of the previous green candle. So that's where we gained our strength and we moved up. And even this red candle here is still within the body of this green one. We have a doji candle, then we fall out. All right. This one, the top of the red candle is below that horizontal line of the doji. And then the next green one is within the body of the previous. The next green one is on top of the body of the previous. That's a good thing. And then the next one, there's plenty of crossover. So this one is the first one that falls outside of the body of the previous, and that makes me take note, which says momentum could continue going downward, which is confirmed by the bearish crossover on the stochastic that just happened, the falling away of the fast line from the slow line on the MACD oscillators, which lag behind the stochastic, and printing of two solid red bars on the histogram. So according to this chart, we can still see a few clues about where we could go. 55K is right there. I've got this purple line here that coincides with something that happened way back when. So that could be a clue. But otherwise, it doesn't look like this node sticks out. So it might not be a stopping point. So we'll have to keep our eyes on this. All it tells me is that it's possible that we return to the red line. It's possible that we move up, but I'm going to give a 60% forecast on continuing to drop and a 40% chance of going back up. So the probability is that we are going to continue to drop down. If things get volatile, I'll probably come back and hit you up and give you some more videos. So stay tuned. Post your comments below and let me know, do you think this momentum will continue downward, or do you think that magically we're going to bounce out of this because it's just a short squeeze? When do you think the short squeeze will end? I'll be looking forward to hearing your comments, and until then, I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you would like to help me support the cost of producing this information, you may do so with the giving of a super thanks. And I thank you in advance. That's all I've got for now. This is Carlton, and I am out.